like I get to see the mistakes guys make after it falls and the things that guys do right after it falls. Like I get the benefit of seeing both sides of it.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's Jon Prischmann. Well, John, a couple weeks ago, you said you were sick of summer when we had our first 2 days of 84. You must really be hating the 90s and humid right now.
It's like the jungle.
It does feel like the jungle out there. That must be, you can watch the corn grow, I think, especially looking at prices.
Well, I always say to myself every time this time of year that it's time to get productive. Let's clean some stuff up, organize, let's get productive. And I always say that, and then I usually try to go fishing.
Usually what I see is a whole lot of stuff comes into the office, and I'm not talking office-related stuff, so you must clean from somewhere. Just all appears here in the office.
These are potential treasures that I need to sell because I for some reason I didn't use it as much as I thought I was going to. So I got a lot of that. I got some repairs stuff. Yep, there's some parts around the office, but it's all very important in the big scheme of things.
Yeah, well, I like it. You can have a guy come in and talk about an account and maybe sell him a fishing rod too.
And various fishing equipment. It's all spread from the front of the office all the way to the back, which is about as long as 50 yards. So a lot of hobbies spread out throughout that 50 yards.
Maybe you need to do the Blue Creek retail store also on the front.
It's getting there.
Yeah.
That might not be a bad idea.
You might have to start wearing pants.
Yeah, well, shorts today.
I like it. Let's talk. I mean, we briefly talked about this in the past, but you've been trading. You've been a broker for a long time. How long? Let's talk about John for a minute. How long have you been involved in the commodity markets?
It started with Ken Roberts. I was on my way to Washington, actually on a train, one of the only trains I've ever taken, going to work for Disney on Ice. I had already worked there, but we were headed to Kennewick, Washington, I think. And I had a Ken Roberts book that I read on the train. That's where, when you started in commodities, that's where everybody started. And then it looked really good. He showed how if you'd have just did this in coffee, how $2,000 would have turned into $60. And so I liked it ever since I read that informational book, or it was almost a series to get you started trading. So 1998, that would have been that year for sure. I can remember it perfect. And I started trading real small, and I was pretty young, didn't know much, but then that's when oil was $11, barrel, and a 30-cent move would have been a pretty big move in oil a day. Sugar, was a market I trade a lot of. You were looking for $125 profits and getting out, 10 ticks in sugar. And stuff just didn't move around. Corn certainly was, in the twos often. And if you got real lucky, you got to the threes briefly. But it was just kind of an era where commodities were really out of favor. Like they were dirt cheap, $9 to $11 oil for years. So that's when I started, and that's maybe where my more conservative approach came from, is that the stuff wasn't moving hardly at all. You had to fight for $200. But then it didn't go against you real fast either. I remember being in Kansas City, again with Disney on Ice, and I remember I called my broker at the time, and he said, beans moved 5 cents, and it was a huge move then. What's the news? China bought some, and that was big news for the time too. That was kind of when China started buying our beans. But a 5 cent move in beans was huge, and so it was a very calm time. And then I liked it so much. If the stage manager, it didn't matter where we were in Germany, and he was looking for me, he would go find me at the payphone. I'd usually be on the phone with my broker back home. He always knew where to look for me if he was looking for me, and I wasn't supposed to be where I was. I was always trading on the phone. So I did that in probably, I think it was 6 years on the road. So probably right around 2000. I'll have to go look at my license online. But I think 2003 maybe is when I started brokering, 2004. So about 20 years, yeah. So a long time.
See, you've seen a lot of moves, but you've never been a producer, right? You've just been a trader.
Yep, never. Both sides of the family, there was a farm, the grandfathers. But in the 80s, how it went, they one of the brothers tried to keep it going. He was a highway patrolman at the time, too. And, in the end, both farms got sold. And one, not two, it was, maybe 10 years ago. It's like it wasn't all in the 80s that we got rid of them. But it wasn't a family. But no, that's something I've never done. Never been. I baled hay for my first job, which was a terrible first job, but I think
that was my first job too. I know exactly what you mean.
Just super heavy after the rains, those little square bales and itchy. On days exactly like today is when we'd be going to.
Today is the day to do it. 94 and 98% humidity.
Yep, yeah. I brings back memories. But that's as close as I got, and I think that probably actually helps me. Some guys might disagree the background of farming. I don't think you need that for trading. I think it helps me because I have no attachment to it whatsoever. Other than I want to see guys do good at marketing, I have none. So I have a lot better impartial view, I think, of the markets than a guy that is cheering. Let's say you're actively farming and brokering, you're probably going to be leaning on the bull side more than the bear side, I would imagine. But no, that's the history. I have been doing it for a very long time.
I think I agree 100%. I think it's important, obviously, to have a farm background or farm knowledge, which you develop over the years, right? And
yeah,
all the guys you talk to on the phone have that knowledge, and you glean and learn and grow. Yep. You grow up on a family farm, but
and the cattle market's got a unique language. There's no doubt they all do. They have their own language, like the markets have their own language.
Yeah, but I think I agree with you. The impartiality of not being a producer while you're the broker is important because of the bias that it brings in, right?
Yep. And I think we've talked about this before. You're seeing this real, as the information goes to more and more phones, it's more concentrated. Not that people didn't have smartphones 3 or 4 years ago, but I don't know that their email and all their texts and everything were coming to their phone, and you're getting the notifications in real time. I think that's kind of happened. Like a guy like me, even I'm much more organized on my phone now than I was even 3 years ago. Like when I get an email, it's dinging on my phone. Like I have it to where it's very organized. I think that's happened on the farms too, and I don't think that's helped marketing at all. Not from what I've seen. It's almost like politics. You're subscribing to what you want to hear. It's very easy to do that. It's very easy to get real-time information. And I can see these guys subscribing to people when they call, they tell me these stories, and it's like, that's not even real news. I don't know where that came from. That's not, I hadn't seen this before, so this is all very unique. So I don't think the smartphones have helped. But, the marketing advice landscape has changed a lot, and it's very noticeable the last year and a half. And I don't know whether it's because it's been a bull market for 3 years that people kind of forget how this works, or if they're just subscribing to things they want to hear, which I think is what's happening. But it hasn't helped people marketing at all this year.
Trading Psychology 101 would say if it's an emotional trade, you better take your hand off the keyboard, right? Or don't call your broker from Germany.
Yeah,
right?
Yeah. The guys that thrive in marketing, and these are the guys that when you learn that you can make money both directions, not that that's your ultimate goal, just to catch every zig and zag. But then you kind of get away from that. It only has to go up to make money mentality, which is not a very good mentality if you're in the commodity business, because it's very, very cyclical. And when it falls a lot faster than it goes up, and it falls more often than it goes up. So the guys that adopt that you can use the downside to your advantage just as much as the upside do leaps and bounds better than the guys that are just dependent on up markets. Because now we're going into a real poor cycle for the cash marketers, the guys that store it at the elevator and pay storage, with higher interest rates. So we're going into a really tough cycle for those guys. But for the guys that are able to be flexible on both sides, this market's going to be challenging because there's not going to be a lot of volatility. But at the same time, they'll always keep their legs moving. Like they're going to be doing stuff. I just got off the phone with one guy who's, we're planning already for December 25. We're working on building a better price for that already because time's on your side this time of year. Once you're past all that weather, once you're past all those danger zones for a way higher price suddenly, we're getting past that now with the development of the corn plant and where it is and the weather forecast. So now it's time to go to work already next year. And that's what the guys that do better in the markets do. I'm not saying they're always right. It's just they're always looking forward. Like they're not going to go outside, like I say, and kick dirt and say it's over. I don't know what I'm going to do. They're looking for ways to make it better. And those guys tend to do a lot better than the other guys. I mean, it just goes without saying. But then you'll have unique years like 2020 where that's not the case. But they're exceedingly rare, those types of years.
So, I mean, right now, the price, beans are down, I don't have a current quote, but call it 70 cents over the last 3 days. Corn's down, 20?
Yep.
Something like that over the last 3 days. It doesn't look good. I would not be happy right now if I was a producer and I was stuck with cash price today.
Yeah.
What do I do? What do they do? What do we only have to look forward and we're stuck where we're at right now?
Well, basis is I think the big risk right now is basis, which it often is this time of year. People are very familiar with that as the supplies grow and there's no place to put it. But what's unusual with this one, and it goes back to what I was saying earlier, where you just didn't see this kind of marketing before. If you had 2.2 billion bushels of corn to start the marketing year, there would have normally been a great deal of fear and everybody very aggressive looking for spots to sell. You just didn't see that this year. They were fearless. Let's see what the weather brings. So what's unique about this year is we have so much carried over for last year. And again, you can argue that, but the carries say that we do. And just watching the August collapse to November and September in beans shows that there's plenty of beans in the commercial channels as well in the end. That's a really bad sign as well. But back to the basis could be really bad this year if it's what it looks like it is. We're not on the finish line. There's still, a month and a half to go before you can kind of say that. But that's where I think issues could develop because even if futures rally from here to go sideways or slightly higher, if there's nowhere to put it, they're not going to pay you very much, to bring it in, if they can even bring it in. And what else is not going to help is that Chicago wheat was a big crop this year. Kansas wheat was a lot bigger than they thought it was going to be, way bigger. And then Minneapolis is a monster, it looks like, out there. So all of a sudden you got wheat taking up space too, a little extra wheat around. That's not going to help. So it's just kind of looks like a lot of basis risk right here. So I've talked to a number of guys, and I didn't tell them to do that, but they had told me they locked in basis and they were doing that and they were working on that, or they did that in the summer, and they seem really relieved they did that. Almost like they can see what's going to happen coming. But what's unique about this market is that we have so much carried over. I still get old crop calls to this day what to do with it. And you just don't see that normally. So I think we're going in kind of an unexplored territory with a physical amount of grains around. What's that going to mean for the basis? I mean, it doesn't look good.
Yeah, no. I think those are all things that we've talked about since we started this podcast back in March and have talked about, warned about, and now we're here. Now we can't, like you said, go out and kick dirt. So there are options. There are things we can do, but it may not be, this year. I mean,
the one guy I was talking with on the phone today, it's a large farm. But they're in a very dry area, and that's why they do a lot on paper, because they never know what they're going to have to, so they had to learn to do it this way more than the elevator way. And so we have plenty of stuff on a lot of different things, and, for the downside. And this was put on not this last May. Well, some of it was, of course, it's always a work, in progress. But, 2 Mays ago, that's where a good majority of these hedges are from. But we're already working, and I think I mentioned this earlier, on 25. Like, instead of just saying it's over and giving up, we're already working on 25. What can we do? Is there anything we can look at to build a better price? And that's where I was talking to him for about a half hour today. So we've already moved on to the 25. We already see what's happening in 24 and what's likely to continue to happen. And then it's just a matter of 25 getting to the front and then them doing the same thing they're doing right now. So that's what's ugly about carry markets is you're low price in the front. You have a lot of carry in the market. You know, it's all the way up to 440, I think, in July. And what are we, 390 something in the front? So what happens in grinding bear markets is the front contract's always the lowest price one, the back end's the highest. So you can't buy time if you're going to get long. And if you go long in the front, it just falls back to where the last contract left from. Like last year, like March went off the board at 390, and then July collapsed to 390. They all just kind of go to the same spot, so you're always just spinning your wheels. But that being said, there's plenty to do in the markets. I am definitely not going to put any recommendations out. That's what a guy like me is for, is to come up with these ideas or help come up with these ideas. So I'm already busy at work doing that. I have a lot of phone calls planned for tomorrow. And the first phase for December 25 will go on tomorrow of what I'm going to do. You just always keep moving. The biggest fear is that it goes to max carry and just sits there with zero premium to sell, no volatility, no hope. And then I'm going to move to interest rate markets and start trading that. But, we're not there yet. There's still plenty to do. And so I'm busy working on that. And then, of course, doing what you can do for the hedges on. You got to manage the hedges that you have on for 24. And that story's not done. At one point, you have to get out of them. So where do we get out of them and how do we get out? And then you got to look to exit those when it looks like the coast is clear. Because if you hang on to them for too long, you end up giving a lot of the hedge money back. So that battle's not done with 24 stuff. But again, you still have a lot of guys talking about 23. That's just unheard of this time of year.
Makes sense. And as you've said many times, it's one thing to be right on the hedge. It's another thing to make it pay.
Yeah. So. Yeah. Puts. I like a lot of puts and I like calls too, but it's very easy to get, on the right side of them. It's very hard to pull the money out of the market. Greed gets you. The second the fear is gone, the premium dissipates really quick. So, even though they're fun to have profitable hedges on, that money disappears really quick the other way too, just on slight bounces. So you really got to manage it this time of year. I think one of the guys I follow mentioned that there's been one low in July in 16 years for corn and beans, and the rest of it it's August or September or various other months, but it's not July. So it would be uncommon for us to bottom this month. Not impossible, of course. So I'm going to play it with the seasonals and try to manage it that way, which is generally find a lower or in August or September.
Makes sense. You have any updates on the meats for us? I haven't been following a whole lot. Cattle had a little bounce last week and then gave most of it back.
Yeah, I think when we were talking last, there was no opportunity as far as hedging goes because we were so far into the cash market. And the market did clear that up. I had some bull spreads on. Not near enough because seasonally they don't tend to work, but they did work very good this year. I'm very light on the bull spread, so I've gotten out of those, and I'm entertaining the bear side of stuff because the curve is really flattened out. As far as hedging goes, though, now it's at least a more favorable board. I think where it's still $4 or $5 under cash. If you're going to go with max cash, I think 93, 94, 190 in Texas last week. But we are getting to a critical seasonal window. And I will be working with the cattle guys on getting on stuff. I'm not sure what we're going to do yet, but it is going to be the time of year. The next 3 weeks is exactly what I'm going to be looking at.
Makes sense. Well, if we're not super interested in making moves on the grains, and cattle seems to be... Maybe we're eyeing that up in the future. If we just want to speculate, what are we trading?
It's going to go into a more day trading mode now. Like using stops. If there's two groups of people, guys that are pretty busy that need physical stops in. I'm not a big fan of that, but I do see the need for them. And then the mental stops. So you're just jumping on the trend that's already established, and then using stops just in case it's going to flip over on you. It's still pretty nice trends that we got going, and clearly they're down in grains. Cattle's been tougher, but the grains have been down. Just using stops and more towards a day trading. Like we're moving 3 days that direction, we're getting out. Or swing trading almost is what. That's what most of these markets are going to. And unfortunately, there's going to be a lot of politics involved in the days ahead. I said last time I was sick of it. I'm even more sick of it. Like, if it's possible to hate it twice as much in 1 week, I do. Now oil is being drawn in where, the idea that OPEC's going to drive prices down to get the, obviously the candidate they want into the office more likely. One's more energy friendly for them or price friendly for them than the other. I'll let you guys figure out who's who. But, that's going to just be a daily part of trading now. Unfortunately, politics have entered the chat, and we have to talk about it. It's going to be brutal. But we'll just discuss how it's going to affect the markets. Not so much who's going to fix it because, of course, nobody fixes anything.
Right.
But it will affect the markets, and oil is the latest one that it has affected with the idea that they're going to open the spigots, get the candidate they want, more likely in the office that's going to cause higher prices for them later. Whether that's true or not, I don't know. There's certain candidates that are saying that, and it does make a lot of sense. But the oil market's been weak. Where I think is going to be interesting is going to be the interest rate stuff. Things do look like they're slowing down, and that's going to affect a lot of markets. So obviously it's going to affect a lot of our commodity markets. I'll be concentrating on stuff like that. Again, I'm going to get into the interest rate stuff. That has been dead for a long time, and of course now with higher interest rates, everything's back the way it used to be, where the shorter term interest rate stuff really interests me. I used to trade a lot of euro dollar stuff, and now it's called SOFR futures. So that's where I'm going to be at, and then of course I like markets like sugar, cocoa, and coffee. If there's opportunities, there's a lot of different commodity markets. So. But I think it's going more into a swing trader, day traders market than a trend traders market. But it's been some big trends in grains, and that's obviously been down.
How about any of the equities, the NASDAQ or S&P or Dow? You watching those, trading any of those?
Yeah, every day I have people short the market. Some guys go long the market. You can trade any of the indexes that you want. You have micro size, you have the regular size contracts. And then you have NASDAQ. NASDAQ is very popular, S&P 500, and then the Dow. So, yeah, people are in there, believe it or not, quite often. The bias is, without a doubt, it's going to fall any day now. Those people have one thing in common. Everybody's been wrong forever on that.
I know I've paid for that.
Yeah, I've been on the short side and wrong, too. But that, without a doubt, is the most popular position to put on. A guy should really go with the path of least resistance, and that's up. But the tech stuff looks like it's getting really tired up here. You got the NVIDIA guy. He looked like the CEO cashed out on plenty of stock here lately. So that in higher interest rates environments and in softer economies, technology is the first to fall. All the pet projects, all the stuff that's not absolutely necessary. Gets cut right away, and that's in tech. So that's where you want to be looking. That's where you're going to see the fall first, in my opinion. But no, guys love to trade the indexes. The guys that are having a little more success are doing the swing, are in the swing trading. Like 3 to 5 days down. 3 days down, they grab their profits. Those guys are doing better than the guys that stay. The trend followers, unless you're long, are not doing very well. But no, there's a lot of commodity markets. Guys get really wrapped up in, and there's only grains. Of course, there's only grains for grain hedgers, but on the speculation side, like you're talking, it's just the amount of opportunities are endless in markets and the combinations you can use. So I'm going to be concentrating on interest rate stuff. I think that's going to be a more predictable market and, maybe a little smoother trends, I'm hoping. And they're moving around.
Talk a little bit about interest rate markets because they are different, right? Yeah. Rates go up, bonds do what? Bonds go down.
Yeah, it moves inverse. So bond price goes up, the rates are down. Rates go up, bond price is down. They move inverse, and it's a foreign concept until you get into it, and then it's a very simple concept. Like the SOFR futures, basically pars 100. So if it's at 94, they got a price. Short term interest rates at 6%. So, but it's the trends that they establish. So basically, what happens? Why I like the shorter term interest rate stuff. the closer you are to the front, like meaning it would be obviously you have August, but September, the least likely interest rates are to change a lot. So they tend to be the more stable, and the further out you go on the short-term rates, it sounds silly, but you can go out years in the short-term rates. Like you go out to December 28 and have a lot of liquidity out there. But the further you go along that, then the more volatility there is because the more uncertainty. But why I find it simpler to trade is it's just perception. They already know where the rates are today, so that's already priced in. It's where we perceive them to be headed. So obviously a lot of financial reports influence that. And or the stock market be down 1,000 points in a day, then all of a sudden, it would look less likely the interest rates are going to go down. So interest rates would fall, meaning the prices would go higher. Just me saying that sounds very complicated, but it's not. You know what I mean? When you get the concepts down, it's actually very simple. It's all basically perception of where interest rates are going. That's where you're speculating on.
You obviously have your market movers like the FOMC is tomorrow.
Yeah, that'll be a big mover. But you don't have to be in before that. You don't have to guess right. You can just simply hop on the trend after they say what they say. You will get some ugly reversals where they talk one way and then by the end of it they're talking the other way. So I tend to let all the volatility kind of kick around while they're talking. Other guys thrive in that environment. They love that back and forth. And then I just try to hop on the trend after they say what they said, and you'd be surprised how long it moves that direction after they talk. Go look at some charts right now. Go look at the SOFR futures and then the Fed meetings and then see what they've done days after that. That's why I like it. It tends to, once it gets going that direction, it tends to keep trending that way.
Hog traders want to trade while he's talking.
Yeah. Yeah, the hog stuff. I'm very interested, and I got some longer term positions I'm putting on. But hogs are a market that's definitely on my radar screen for sure. That should be a fun market in the year ahead. I'm going to be in the spreads in hogs. So if you want to know what I'm doing, definitely give me a call. But that should provide an opportunity. It looks like a very good setup.
You said spreads.
Yep.
Nearby or farther out?
Further out.
I'm making you give some hints.
Further out, but I mean, if it gets a little more obvious what hogs are going to do, I'm not afraid of the front at all. It's this time of year, you get a fairly big gap. August is usually well above October. It can make for difficulty in spreads or a lot of volatility. But there is some fall ones that I do like that have been very good to me in the past that deal with October. But it's got to set up right. I'm not there yet. But the setup's happening. That's where I'm a patient guy. I like to kind of track this stuff. But the one I really like, and again, you'd have to call me. I'm not going to say it on air at all because it's actually kind of thin, right? Especially this time of year. It's set up absolutely perfect this year for a market that has been downtrending for a long time. Hopefully, it continues to do what it's doing, and then I'm going to start putting it on.
Makes sense. Anything else you want to share with us today, John, or head out into the sauna and catch a couple fish?
Yeah, I got lots to do. That isn't work. I mean, it's plenty of work. It's just not this work. No, but my advice to these, if you're listening, like, there's plenty of things you can do, and it's never too late to learn. Like, don't be in that group of people saying there's nothing to do. Trust me, there's guys that are always thinking, and I'm not saying every idea that there's works, but they're always like, how do I improve this price? And I would imagine these are the types of guys in regular business they would be problem solvers in this business, not saying, hey, we're going to go out of business. I don't know what to do. You want to be that way with gray marketing. Like, is there anything I can do? Is it smart to do this time of year, or should I just wait? Don't be in that group that says there's nothing to do. This is all rigged against me. Because trust me, there's plenty of people that aren't like that. And they do much better in the market, or much better in the marketing side of stuff. And again, if you're losing money here, you're making money on your grains, that's a hedge. So it doesn't always translate into money here at all. It's just better marketing, better prices. They're always working on getting that. So I didn't want to insinuate they're always getting tons of money here at all. It doesn't work like that at all for hedging. Yeah. But they're building a better price to market better. That's the whole goal. And some of it happens here. Some of it happens at the elevator. Some will be in the cash market. Some will be in basis stuff. But that's what these guys are always planning, and things change quick, and they're ready for when they do change. It just happened. What do we came up, 60 cents in beans? That's exactly what I'm talking about. Don't give up. The stuff comes up quick. Just be ready for it when it does, and then try to act.
Well, and that's the, where we started with. You can't just go kick sand and say, woe is me, and I'm done. Right?
Yeah, you're going to have a rough number of years that looks like we got coming up here.
And you also can't just make a move today and say, this is my move and I'm going to stick with it. The patience part that you brought up is super important in trading. We're watching things. We're looking for ideas. We're weighing options.
Yep.
Like, you need to have all those things in place, but it's rare. You're not going to have a guy call up, open an account, and put his hedge on the next day necessarily, unless he's already coming with that idea.
I actually did have that.
Typically
before the report, I don't know the person very well, and we need to short 10 contracts is the first thing he did. To protect his corn, obviously, I would assume is what he said he was doing. But that's exceedingly rare where a guy signs up and plops a big hedge on immediately in front of a giant report. But no, it's all about learning about it. You don't have to be doing anything. You want to be if you don't know what you're doing, you want to be learning. So when it does come and things do change very fast, you're ready for it. It's a process for sure.
Yeah, and we talked your history. We're definitely not going to dive into mine, especially not on this episode. But I've been a broker for 6 years.
Yeah,
and I still feel new. I still have questions. I still come and ask you about things. Like, it's the commodity markets aren't easy.
No, and otherwise there'd be a broker in every corner.
Right. Don't be afraid to just call and ask about something or to do something, because it's hard. And there's so much terminology. There's so many date things. There's so many contract things. There's so many different ways to hedge. There's so many different ways to speculate.
Yeah,
that no one knows all the ways. That's why most people concentrate on 2, 3, 5 markets maybe, and that's what they watch.
Yeah, when I was younger, in my 20s and going into my 30s, I always heard consulting this, consulting. I just thought that was the funniest thing. Somebody pays somebody for consulting work. Like, that sounded like a dream job for me. Like, that's what I want to do. It sounds like you get paid for basically doing nothing. Now, as I've gotten older, there's no substitute for experience. And it's not just in this business. In a lot of businesses, consulting, if you get a good consultant, it's going to save you a ton of time and money and energy. And I now see how important that is to basically any business that you can think of. You can only learn some things by going through it. And that, with time on my side that I've been through a lot of this stuff, hopefully I can answer a lot of these questions. But like you say, you see new stuff every day, or nearly every day, that you didn't even know was possible. I think the last time I talked about how after the market closed, I was still able to get out of a position one time. That had to do with the pits. But you learn stuff every day, and there's so many markets. People always think it's just like corn, wheat, soybeans, cattle, and hogs, and that's what they think of the commodity market. They're gigantic markets, and there's tons of them. And it basically dwarfs any other markets in the world.
Yep. I'm going to concentrate on dry whey. Is that right?
No. I've traded dry whey. I like dry whey. It's a little thin. You're going to want to use limit orders. It doesn't hurt to have some industry knowledge there. That's a market that I've been in, dry whey. Absolutely. Non-fat milk. Milk futures, of course. That's that. Butter's a little, that one moves around a little bit too much for me, but even when you think you know all the markets, there's ones that you probably have never heard of.
Yeah. Well, if you're Gen Z, you can come trade Bitcoin too. I mean, that's there's Bitcoin futures on Bitcoin too.
Yeah, so. There's something for everybody. There is. There's micro Bitcoin. There's the regular Bitcoin, which is 5 Bitcoin. That's actually a very big contract.
That's a huge contract.
Yep, and the advantage, of course, of commodities, and it cuts both ways, is the amount of money you have to put down per contract. And the way I feel with Bitcoin, it's already plenty of leverage. I'm not so sure they needed 5 for one contract, but they do have a micro contract too. And guys do. Some of the online guys, I see a Bitcoin in their account every now and then, a micro, and I'm sure it's going to have its place.
Yeah. Well, if you do have big Bitcoin holdings, it would be a way to hedge.
Yes. Yeah. If you're a company, I don't know how you could transact in Bitcoin without hedging something off, especially if you're selling like cars. But that's a whole nother discussion and argument for a different day.
Yeah. Let's, we'll say sometime in June of 2027, maybe we can discuss hedging Bitcoin.
Yeah.
That's not my market for sure.
We'll talk about it this winter.
That sounds good. All right, John, leave your number and we'll wrap it up.
Yeah, if you have any questions on what we're talking about today, 218-731-1578.
Thanks, John.
Yes.
You think that's enough to cover?
Oh, yeah.